What's up, everybody? This is Mondays Mean Business, and today we're going to answer the question, what's the difference between an LLC and an S-Corp? Check it out. What's up, y'all? My name is Saluto Uba, and I am the entrepreneur lawyer as well as the founder of the Uba Law Group. We're a law firm that focuses on business formation and intellectual property to help you protect your assets, save money on taxes, and attract quality clients. Now today, I want to answer a question that I've heard so many times, and people really misconstrued this thing and made it more complicated than it is. And that question is, what's the difference between an LLC and an S-Corp? And the reason why this is important is because by this time, everybody's heard of the S-Corp. A lot of people at least have some idea what it is, but many people have things misconstrued and they think that they need to set up an S-Corp way before they do, or on the flip side, they should have set up an S-Corp years ago, but they didn't have all the right information. Okay, so if we're gonna break this down, we need to separate your LLC into two categories. There's the legal side and there's the tax side. Now over here, the legal side involves your LLC as the entity set up with the state. It involves your legal protection, and it involves the fact that your LLC creates a separate entity from you personally. So if something happens with the business, if somebody sues the business, they can't sue you personally because the business is over here and you're over there. That's the legal side. The LLC is a legal entity set up by the state, and it puts a wall of liability protection between you and the business. All right, so that's the legal side. Now, when it comes to taxes, the IRS is nationwide and they have authority over how everything is taxed. So when it comes to taxes, unless you do what's called an S-Corp election or a C-Corp election or some sort of tax election, your LLC will automatically be treated like a sole proprietorship. Or if there are multiple people inside as owners of the LLC, it'll be treated as a partnership. So that's just by default. So what this means is all the profits or the losses of your business will flow through your LLC directly towards your personal taxes. So for example, say you had a great year and your business made $100,000 in profit. When you do your taxes, that $100,000 doesn't go to like a separate LLC tax return. No, it all flows through to your personal tax return, and your LLC profit will go on what's called a Schedule C, but that all is attached to your personal tax return. So all the profits and the losses of a regular LLC just flow to you naturally, like it was your own personal money, like, you know, you worked a regular W-2 job, and all of that profit is credited to you just as an individual. So that's how an LLC is generally taxed. Now, when it comes to taxes, in addition to whatever your regular tax bracket is as an individual, you also have to pay self-employment tax on top of that. So in this example, let's say you have a 20% tax rate, and we just said that you made $100,000 in profit. So you have to pay 20% of that $100,000 on taxes. So that'd be $20,000. But like I just said, on top of that, as an entrepreneur, as a self-employed person, you have to pay self-employment tax. Now, self-employment tax is about 15%. So with that same example, you made $100,000, you already have to pay $20,000 for your regular taxes, and now you have to pay 15% of that for self-employment tax. 15% of $100,000 is $15,000, an extra $15K that you now have to pay. No bueno. If you're like me and a lot of other business owners, a lot of my clients, we don't like that. So we want to bring down that taxable amount as much as possible. And so this is where the S-Corp comes in. What the S-Corp allows you to do is put yourself on payroll, and now you can give yourself a reasonable salary. So instead of paying the full 15.3% for the self-employment tax on all of your money, you only pay that on your salary. So let's revise this example. Say your business made that same $100,000 in profit, but now you've given yourself a $50,000 salary because you've elected to be treated as an S-Corp. So remember, when you become an S-Corp, you put yourself on salary. So now in this example, you still get taxed on all of that profit. You still pay your regular taxes, but when it comes to self-employment tax, you only have to pay that 15% on your salary. So before in the other example, you had to pay 15% on $100,000. Now in this example, as an S-Corp, if you give yourself a $50,000 salary, you only have to pay that 15% on the $50,000 salary. So people use the S-Corp to drop their self-employment tax tremendously. And so in this example, your self-employment tax just got cut in half. So this is how you save big money that's repeatable, that you can do year in, year out. The S-Corp is a strong strategy, and it's a great tool if your business is really profitable and you're making money and you're looking for ways to bring that tax liability down. S-Corp is not a get out of jail free card because there are lots of different scenarios where it does not make sense to have an S-Corp. So one of the things that I'll hear is a business owner who's just creating the LLC, they have a great idea and they're getting it off the ground, but they haven't really made crazy money yet. Sometimes they'll come to me and say they want to form an S-Corp automatically. And for many people, this is a bad idea. This is not a good idea. So, and the reason for that is, even though the S-Corp will save you money on self-employment taxes, you have to make enough money for it to make sense. And so here's what I mean by that. The S-Corp puts you on salary for your company. So since you do have a W-2 salary, you have to do all the things that come along with that as a business owner. You have to have bookkeeping, you have to have accounting, you have to have your regular tax withholding, you have to have your monthly 941 quarterly tax report, you have to do your monthly tax payment to the state if that's how your state operates. And then on top of that, you have to do a business tax return now that you're an S-Corp. So all of these things naturally cost money, and all these things have a fee associated with them. So we don't want you to create an S-Corp if all of the fees and the costs associated with that would be more than the money that you would save from the tax savings. Does that make sense? So if creating an S-Corp would only save you $1,000 in taxes, but it's going to cost $2,000 in fees and accounting services and all that good stuff, then it doesn't make sense for you to create that S-Corp, because ultimately you're still going to be losing money. The S-Corp is made so that you can use it strategically to save money, not lose money. So I know this has been somewhat of a long video, but this is a really important question that I get asked all the time. So I wanted to create content that'll help you break down the difference between just the regular LLC and the S-Corp, so you know when to move into that step when it's the right time, and also you don't move into an S-Corp when it's not the right time and it'll end up costing you money. Okay, so until next time, keep on grinding, keep on hustling. I believe in y'all. Don't forget, Mondays mean business. Peace.